Ira Epstein of Linn and Associates with your metal market wrap-up for this Tuesday, and we are now on December 22nd, 2020, time 6:15 p.m. Central Time. So in the metal markets, the silver got walloped today, and the gold market down. It's an interesting time. What's really going on in these markets are they're holiday markets. I don't know how to explain this to traders at this time. You'll get orders that normally wouldn't be considered really a big order, and in a holiday market they are, because the big boys pull away from the market. The dollar rallied sharply today. That is what was the pressure at first on a number of these markets. But the stock market also fell as the market's having to deal now with a lot of economic data. We have a ton of it coming out. And then you're getting the COVID-19, the mutant variant. Now, so far, everyone is saying, and everyone being Pfizer, BioNTech, and Moderna, that they're in their tests. They have scientific reason to believe that the vaccines that are there will work against this variant. Okay, that's all you can do. If it doesn't, we'll find out in a couple of weeks, and they'll have to develop something else, and that'll push back the economic outlook. But we don't know that at this point. We know what they think should happen. Now they're testing to see what that's going to do. I'm surprised we're not down more also on the energies, considering the API number was very bearish number. Didn't look good to me at all. So when we come to the gold market, if we take a look at where this market is, the 18-day average of closes is in red. That number is 1893.30. That is the resistance point that I see in the marketplace. When we come to a chart action here, well, you've got sort of this mixed chart. It's all lopsided, trying to figure out what it's trying to be. And when I put on the swing line to get a little help, it's of no help. You have a pattern that's got a higher high and a lower low. That is not a trend. You have a market that made a challenge of the 100-day average, couldn't quite get there yesterday, got to 1912, 1915, 50s, that number, and then it fell apart, as you can see. The market now still has upside bias since it's over the 18-day average of closes. When I put on the Bollinger Bands, the market hit it 2 of these times and backed off. That is the purpose of Bollinger Bands. A Bollinger Band gives you an idea in the market of a resistance point and a support point. You have to learn how to work with them, and after I come back the first of the year, and yeah, I'm going to go away for a few days, folks, I'm telling you that now, if they don't bar airplanes. It's been 9 months that I've been house locked. I want to go somewhere, and I've got a secret spot. But if I can get there, I'll be gone about 3-4 days. It's not very long. And then I'm going to record this and give you that type of course. You'll be hearing a lot about that and stochastics this year as I put those two together right away. And that's my goal there. Live webinars will come back in January as well, and more of my special reports. We got a lot to do. But I don't see anything here. When I look at this, I see resistance hit, no trend, bias up. And when I look at momentum, we had gotten overbought, and we're correcting that to the point where you're no longer there. Any reading under 70 with both numbers, that's the key. You're no longer in overbought territory. Had you been overbought? Well, let me just show you. You can see you had a 70 reading here, you had a 78 and a 78 reading, 86 and a 77. You've worked that off. Does that mean the market's suddenly a buy? Not at all. All it means is you're not overbought with no trend to trade off of. The gold-silver ratio, well, you can see that the market's finally correcting a little bit to the upside, which means silver's a bit weaker than the gold. But on the chart pattern, silver still looks better than gold completely. The market, if you were to take out 25.12 tomorrow, Wednesday, to me, that would be a problem for silver. It should set up a break to the 24.68 level. Why? If we take a look at this action, that's an outside day up. My work calls, and one of my rules, it's not anybody else's, that if you take out the low of an outside day up, the market often goes to the closest moving average or Bollinger Band right after that occurs. You haven't done it. Where's the market finding its support? It's very clear. Yesterday and today, the 100-day average of closes. The market, is it overbought? It too has worked itself out of there. This is actually a stronger chart than gold. The trend is up. The market's holding the 100-day average. If it can mount a rally, maybe you go back to that upper Bollinger Band. If you take out 2512, well, then you break that pattern, you put in my rule, and wherever that 18-day average is, I wouldn't be surprised if you get there. It took copper a very long time, but it's done what I was hoping. Now, remember I had told you when you took out this high over that, I still was owed the 18-day average since you lost the embedded reading, but you couldn't make a trade for it. It took a while. It got there. I call the market now neutral. The trend is still up. The momentum is pointing down, so why do I call it neutral? Well, the swing line is up, but I don't have a settlement yet that I know is really under that number, the 18-day average. You had it on the close today, so that's one. You got to prove that you can do it tomorrow. Should you take out these numbers right back here, and that number specifically is 350, then you have a different ball game. You lose the higher low, higher high sequence. Right now, I think the market, I would call it neutral. I think that's the right thing. Swing line up, bias down, momentum pointing down. Platinum. Okay, we get a bounce. This was the washout day, the panic day for traders. You held very nicely to Bollinger Band 100-day average. Anyone that was in there that understood these, and if they were short, they're probably going, I'm licking my chops. And now the resistance is back at 1030.70, but to take a risk back to 1066.50, I don't think you're going to get that. The palladium market is still battling between the 100-day average and the 18. The market is trendless. In fact, that's sort of a theme other than silver that we have going right now. And silver, that 2512 does itself in. I'm not saying that will happen, but it's trendless. It makes sense. We're at Christmas time. Tomorrow's the last full day of trading before you get a half day of trading on Thursday morning, and then traders take off. They're going to say to you, bye-bye. You've got a lower low, higher high in the dollar index. Okay, you lost the embedded reading. You've already gone up to where you had to go. When you lose the reading, to me, it's the 18-day average, or is it? Let's talk about that. Here you hit the 18-day average, but you still had the embedded reading. So the work could be that the market wants to come back and challenge it again. Wouldn't be a surprise to me in any manner whatsoever. So what do I think's going on? I think you're in a holiday mode. And I think if you're trying to make something out of nothing at this time of the year, you hurt your trading account. I'd be very cautious. I own a brokerage firm. It's not easy for me to say that. I'd love for you to trade, especially with us. But this is really not the time you do something like that. This is the time you get ready for your trades. And, you should make yourself that trading these stock indices, number one, it's exciting. Number two, it can be prosperous. Number three, it comes with a lot of risk that can hurt you. Why not move to the 1/10 side contracts? Build positions rather than plunge all in when you're trading 10 of these at one time. You could trade one at a time and build up to that. I know you're going to say to me the commissions. Nah. At $1 a side, it's not expensive. The exchange fees are cut all the way down on it as well. So if you're looking for a way to trade this year, you should be concentrating here. You build your positions, you're taking off, you're taking on. If you're looking at the return that you're getting and things like that, well, it's 1/10 the margin, so you're looking at a different side. That's how I would be doing it. I mean, if you were sitting next to me, I'd counsel you that is the way that you trade, unless you got just really big bucks. Otherwise, you're talking $10,000 margin, $6,000 versus $600 margins, $1,000 margins, same action. Why not take a look? How do you get and find out? Well, go to this site. Now, this is different than my website. You got to put the /micro on it, and it'll explain everything you need. With that, I'm Ira Epstein. You have a good day.